Hey, what's going on? So I want to talk about the importance of knowing what the average range is. Okay, so on this pair that I'm trading right now, I went back the last 10 years, and this number that you see up here over the last 10 years from the weekly opening price, which is the blue line, price has expanded. The furthest it would expand before it goes back into the range is at 370 points. Okay, so I came up with that by measuring how far up price goes up over the last 10 years. I'm pretty sure it's a software or something out there, but I did it by hand. But from the week, all you got to do is from the weekly opening price, you just measure up how far up this price go before it starts to retrace and reverse. And if you do that over years and years in the future, in the past, then you'll come up with a range. And how is this important? Then what you can do, well, I'll tell you. Then what you can do is this line right here. You can come up with a line where if it breaches this line, that it will guaranteed, or 98% of the time, 95% of the time, go up to this line. That's what this is. So right now I'm trying to determine, is it going to come up to this line first or down here? Because this 370 range is from the weekly opening price. Okay. And what I've determined is, going over the last 10 years or so, I put this box right here, this 370 range, on each opening price over the last 10 years. And that's how you come up with it. You probably have to go to the daily chart or the 4-hour chart, to take a look at this. So based on what I'm seeing, I could be patient and just wait for it to come up here, but I'm starting to see that if I could understand the structure and read it properly, then I can get in a lot earlier. So based on what I've seen as far as swing highs and swing lows, let me show you. So this is a swing high, this is ICT, this is a swing high, this is a swing low. So what I've learned is that if it closes over 50% of the range, then usually it's going to try to take out this high up here. This is just the structure, okay? So we got a swing low here. We got 1, 2, 3, okay? This is bearish candle, bullish, bearish. So the way it works is, if this, you have to draw a line out. I call this a swing low extension. If you imagine an imaginary line drawn out here, if this candle closes above it, and then the high is taken, okay, so it just can't close above it. This is what people don't understand, because I've been watching other people's videos. I'm like, it has to create a swing low, which it did, okay? This is premium and discount, ICT, this is all his stuff. If this candle here is closed above, which is going to do so in the next 4 hours when the market closes, if it closes above and then whatever high is taken, it can retrace down a little bit, but most likely it's either going to reach for 75% of this wick or take out the exact high. Thus, meaning that it will go up here to this 370 range. You see that? Which lines up with market structure of this wick right here. This is a wick on the daily chart. This is about 75% of the wick, because usually it will reverse at consequent encroachment. We definitely going to see a strong reaction off of 50% of this wick. So it could reverse down and then come back up. But if it breaches this gray line, usually 98% of the time, 95% of the time, it's going to come up to 370. So the whole point of this is, I'm trying to tell you, if you're one of these people that actually want to do the work, and you're not like one of these lazy folks or whatever, or you're not just in this trading for the money, which we are, but for somebody like myself, is just deeper than that. I just find this stuff extremely fascinating, okay? But obviously we want to make money. So what I'm trying to tell you is that if you're trading, you need to understand and dominate the weekly range. I've dominated this on this pair right here. I'm not going to say which pair, but I've dominated this, okay? So what I'm trying to tell you is that you have to go over the last 10 years and figure out how far up price goes before it reverses, and for how far low it goes before it reverses. Then you can come up with this. This helps you understand what's going on. Then you can back test as well and figure out where your line is, as far as if it breaches this line, guaranteed it's going to come up here. Well, not guaranteed, but 98% of the time, 95% of the time. This line right here, which is 72 points, is pretty strong, okay? And I got that line from coming up with the first area. These two yellow lines right here is the first areas where price will come out of the weekly opening price, and it will go. I've measured this as well. How far up does it go before it reverses? So this is the mini weekly range, and this is the maximum weekly range. A lot of times they go a lot further than 370. It can go up to 600 points, 500 points. But on average, over 10 years, this is what it does, and this is help you This will help you dominate the weekly range. Okay, thanks for watching.